Good morning, everyone. Let's take a look at today's major market themes across the US dollar, crude oil, gold, and Australian dollar. So, starting with the US dollar index, the index traded near 98.2 on Wednesday after briefly moving above 98.7 earlier in the session. While the rebound reflected some short covering, upside momentum is kept by renewed political risk around the Fed and President Trump's announcement that he intends to remove Fed Governor Lisa Cook raised questions about the central bank's independence. And legal challenges are already underway, but markets took it as a sign that political pressure for earlier rate cuts may increase. And futures now price an 87 probability of a 25 basis point cut in September. And technically, the index is consolidating between 97.7 on the downside and 98.81 on the upside. It sits just above its 50-day moving average around 98.06, but momentum remains weak with the RSI stuck in the mid 40s. A break below 97.7 would open the way to 97.19, while only a move through 98.81 and then 99 would signal the start of a more convincing rebound. Next, WTI crude oil. The oil hovered around 63.6, down more than 2% from Tuesday's close, as traders assessed both geopolitical tensions and shifting trade politics. And the US formally raised tariffs on selected Indian goods to 50%, citing India's continued purchase of Russian crude. And despite this, Indian refiners have signaled they will maintain most Russian oil imports, limiting immediate supply disruption. And meanwhile, US API data showed a smaller than expected draw of about 1 million barrels in crude inventories, softening bullish sentiment. And from a chart perspective, oil continues to pivot around 63, with the 9-day moving average acting as a battleground level. Clear resistance remains overhead near 65.76, while downside pressure could emerge if price slipped towards the August 18 low at 61.45. Short-term indicators such as MACD and RSI remain flat, pointing to indecision. And overall, crude oil is locked in a broad range, awaiting either a decisive geopolitical headline or a clearer demand trend to set direction. Next, spot gold. Gold has been resilient, bouncing from 33.73 to near 33.95, which is its highest in 2 weeks. The political uncertainty over the Fed's independence and continued tariff rhetoric are driving a demand for safe haven assets. And at the same time, the dollar's short term stabilization has kept gold's advance, leaving the metal in a tight consolidation zone. And on the daily chart, gold is tracing an ascending triangle with support around 33.57 to 33.46 and resistance just about 3400. The RSI sits near 55, indicating steady but not overheated momentum, while the MACD has turned positive with a recent golden cross. Traders remain focused on whether 3400 can be reclaimed. Above that, 3439 and 3452 come into play. As long as the price hold about 33.45, the broader bullish structure remains intact. And last but not least, the Australian dollar. The Aussie dollar hovered near 0.65 on Wednesday, pressured by a firmer US dollar and domestic inflation data. And July CPI rose 2.8% year on year, well above expectations, while the construction activity also surprised to the upside. But the sentiment remains cautious because fresh US tariff threats on Chinese exports added some uncertainty for Australia's largest trading partner. And technically, Australian dollar is testing the central axis of its Bollinger Band around 0.6492, and momentum has firmed slightly, with the MACD histogram expanding and RSI approaching neutral levels. Immediate resistance is seen at 0.6553 and the August 14 high at 0.6568, while support lies at the 100-day moving average near 0.6446 and the recent low at 0.6415. The pair is still holding its broader range, with direction hinging on upcoming US inflation data and the Fed guidance. So to wrap up, the US dollar remains capped by Fed uncertainty, Oil is range bound around $63. Gold is consolidating near the recent highs, and Australian dollar is holding steady but vulnerable to US China headlines. The next catalyst will likely come from Friday's inflation data and developments on the geopolitical front. So that's all for today. Thank you for watching.